This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. The U.S. Environmental Protection Agency, EPA, and the biofuels trade groups have agreed to extend by 2 weeks a deadline the agency has to issue a proposal on 2023 biofuel blending obligations, the trade group said on Friday. Growth Energy Trade Group agreed to the EPA's request for a 2-week extension on the condition that November 30th be the final deadline to issue the proposal, it said in a press release. The deadline extension does not affect a deadline for finalizing the renewable fuel volume obligations by June 14th. In July, Growth Energy and the EPA submitted a consent decree agreement that required the EPA to propose 2023 renewable fuel volume requirements by November 16th.
Oil prices settled up by more than 5% on Friday amid uncertainty around future interest rate hikes by the U.S. Federal Reserve, while a looming EU ban on Russian oil and the possibility of China easing some COVID restrictions supported markets. Though fears of global recession capped gains, Brent crude futures settled up $3.99 to $98.57 per barrel, a weekly gain of 2.9%. U.S. West Texas Intermediate WTI, crude futures were up $2.96, or 5%, at $92.61, a 4.7% weekly gain.
Moving on to the top news in the energy sector.
U.S. oil refiners this quarter will run their plants at breakneck rates, near or above 90% of capacity, as tight fuel supplies spur high profits and operating rates, according to company forecasts and analysts surveyed by Reuters. The refining industry has minted huge profits this year on buoyant demand for gasoline, diesel and jet fuel. Fourth quarter outlooks should keep earnings high even as gasoline consumption slips during the winter. Largest U.S. refiner Marathon Petroleum Corp aims to operate its system at 93% of combined oil processing capacity, a cooler pace as it completes maintenance work at some plants. It ran at 98% of capacity last quarter.
Just a month before the group of 7 rich countries plan to cap the price of Russian oil, officials are racing to finalize details, leaving traders, shippers and insurers with questions about the price level and how it will work. Officials from the United States and its G7 allies plan to cap prices of seaborne oil shipments effective December 5, with a second cap on oil products kicking in February 5. The unprecedented price cap aims to block Russia from profiting from high oil after its February 24 invasion of Ukraine while ensuring that most of Russia's oil continues flowing to global energy markets.
Next, we have the top news in metal markets.
Saudi Arabia is considering setting up a new metals and mining stock exchange index as it looks to expand its resources sector to diversify away from hydrocarbons, a senior government official said on Friday. Mining Minister Bandar bin Ibrahim Al Khorayef told Reuters in an interview in Sydney that his team met with Australian counterparts to learn more about a mining index, similar to Australia's ASX 300 Metals and Mining, XMM, sub-index that lists metals and mining firms including producers of gold, steel and precious metals. It is something we are studying, but we have not made up our mind if it would be successful, Al Khorayef told Reuters.
Global copper smelting activity declined in October due to fears of a recession, weak demand and maintenance shutdowns, data from satellite surveillance of metal processing plants showed on Friday. Smelting activity fell in all regions except North America, according to a joint statement from commodities broker Morex and Savon, the satellite analytics service Morex launched with Earth-I in 2019. Lower turnover is a natural consequence of bear markets in derivatives, as is lower output through the supply chain in the physical marketplace, said Guy Wolf, global head of analytics at Morex. We will now look at the top news in the agricultural sector. The global outlook for palm oil remains uncertain, with strict pandemic policies in major importer China weighing on demand, while high energy prices and a slowdown in output provide support, leading industry analysts said on Friday. Malaysian benchmark futures earlier this year had surged to record levels of more than 7,200 ringgit, $1,517.07, per ton due to top producer Indonesia's export restrictions, which culminated in a 3-week export ban late in April. Prices have since come down amid concern over a global economic slowdown and as China maintains a strict COVID-19 containment policy that has caused mounting economic damage.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.